Okay, everyone, welcome back to the channel. Welcome back to another weekly watch list video. This video is going to be a lot faster than my previous weekly watch list videos because some family members came down with coronavirus, unfortunately. So I'm like a ticking time bomb right now. So I wanted to get this a day early done. And also, just in case, I woke up tomorrow not feeling so well, or maybe I don't get sick at all. So either way, I got to take care of the family. So let's jump right into it. We're going to do some of our analysis on the SPY, the Qs, the IWM, the DIA in just a second. Before we do, hit the thumbs up. All right. Like I just said, the family's got coronavirus. Hit the thumbs up for me. You're going to learn a thing or two during this video. I promise you. So what are we looking at? Last week, energy just got trashed. Now, the reason why the energy got trashed is because once the Fed came out and spoke so hawkishly, okay, they raised their rates, which is fine. That's what we were expecting. But what wasn't priced in was they're going to keep their foot on the throat of the U.S. economy until the labor market cracks. Most of the time, that causes a recession. That's what started to get priced in. Now, during a recession, energy is not a good play. It's a great play during inflation, but when there's a possibility of recession and lack of demand, that's why we saw oil go down. Energy usually gets hit. One day, Friday got crushed. 1 week got crushed. Everything did, really. So, that's just something to be aware of. If recession is now being priced in, which it looks like it is, companies' earnings are going to have to probably take a hit unless they cut. Now, that's what the Fed is thinking. If companies are going to keep their margins and their PEs, they're going to have to cut workers. They're going to have to cut CapEx spending, which is capital expenses. They're going to have to dial back all that free spending that they've been doing, and that hurts growth. But it keeps these companies afloat while things are, the economy is a little bit tougher to get through. So anyway, that's what the market has been pricing in since Wednesday's FOMC meeting. The economic calendar is going to be ever so important. This week, again, we got Powell speaking. Why is he speaking again? Anyway, we have a lot of Fed activity this week. And then on Friday, a huge inflation number. The Fed said very clearly they need to see compelling evidence for them to start to at least think about, what they're doing is working. So what you're going to want to see is the core PCE. You're going to want to see good numbers on that. If we start to see really good numbers, I think the overall market is going to get a bit of a bounce. All right. So that's this week. That's the most important thing on the agenda for this week. I mean, we have jobless claims every Thursday. That's something that people watch. But you have Powell speaking here on Wednesday and Daly speaking on Tuesday. Let's see, Fed chair speaking. So Powell speaking again on Tuesday. So anyway, it looks like a lot of Fed speak. So yeah, buckle up. So the earnings for the week. This is what we see here. I don't care. It is something when you have Nike, you have Micron, you have a couple of stocks here. Nothing really that important as far as earnings go. Not really that focused on earnings right now. What I am focused on is the bonds, the treasury bonds. This has been what has been just making the market equities really sell off hard. If we look at a 3-month, the 10-year went from 3 to 370. I mean, these are crazy moves. Just in the last 5 days, after Wednesday, at just under 350, went all the way up to a high of 373. And that's just the 10-year. Usually, if a recession was going to start to be baked in, the 10-year will actually, the yield will come back down. So we started to see that a little bit on Friday. The 2-year, this is where the Treasury yield curve gets really, really inverted when you have these shorter term notes yielding way more than the longer term notes. Look at this move just on the year of the 2-year is absolutely nuts. Now the 2-year, this is what is really a good precursor for where that terminal rate that the Fed is looking at next year is going to go. So right now the market has priced in 4.20. They have said that they're looking at anywhere between this and 4.5, 4.6. So we'll just have to wait and see. But these yields, if we look at a 5-day, or a month even, they've gone up like a rocket ship. And really, if you look at the 5-year, look at this. From 2021, these lows, this has gone up straight up, basically. I don't think that that's going to last forever, okay? The market is down a lot right now because this is up a lot. If we want to do a comparison, if you want to do on the year, compare it to the NASDAQ, you can just see where the NASDAQ is, minus 28%. You can see where the 2-year is, plus 1,523%. So obviously an inverse relationship. So, keep an eye on that. That's the bonds. If these things keep rocketing, the equities are going to look less attractive, et cetera, et cetera. But what goes up straight up usually will at least have a pullback. And that's all I'm interested in, is where can we see that pullback? In order to look for the pullback, I'm going straight to our compass, the SPY. All right. Last week, what I showed you guys was this 20 crossover of the 50. 20 crossover at the 50, the 20 crossover at the 50. Each time this happened, we broke down. Each time this happened, we broke down. It happened here. Look, where we were bouncing. It happened. We broke down. Each time has been about 10% of a pullback. All right. Since these crossed over, 10% gotta bounce. 10% gotta bounce. 10%, maybe we can see a bounce. What I can show you on the daily chart is the SPY is at the most oversold spot that it has been, even worse than June lows, going all the way back to where the bubble burst at the beginning of January. So once that RSI is that oversold, it's usually a decent time to look for a bounce. Just like back here, we were screaming, not the volume, we were screaming right here to get short. We were so overbought, and now we're oversold. This is the way the market works. It goes up, it goes down, it goes up. We're in a downtrend for the year, very clear. We are in a downtrend for the year, making lower highs. But just because you're in a downtrend doesn't mean that you can't see some really nice rallies. So I'm always a bullish, I'm always more of an optimist. Even when everything right now at this moment seems like there cannot be anything but bad news, right? What is good news out there? The Russians say they're talking about nuclear war. You have the crazy hawkish Fed. You have companies making 52-week lows. You have a market down so much. Just look at how far we're down from the August highs. 16%, guys. 16%. Now, I know we came on here and said September is usually a very bad month for the market. I am looking for that bounce, all right? In my mind, there's so much negative news baked into the market already that I don't think it would take that much to get things to at least give us a little bit of a trade to the long side. We did test the lows back in June, right here, and bounced just about to the penny. I was watching that last hour of trading on Friday, and we bounced from 363 to close at 368. A 5-point bounce there during power hour. I thought that was a very good sign. But that doesn't mean anything right now. We are testing down here. When these things crack, they can crack pretty big. Not saying that's got to happen, but that's just what we're looking at right now. If we dial back and look at the weekly chart, I mean, these are two really big red candles, but we still closed over the lows. And you have the 200 moving average right down there, just about 10 points away on the SPY. So there is some support. If we look back even further on the weekly chart, there is a very clear spot that this market likes to bounce at, and that is the 200-day moving average. And that's what we're coming down to right here. Now, this year in general looks like an absolute mess. I would have to go back all the way to the tech bubble to see years that look like what we're dealing with, like that volatility. So there can very easily be a lot more downside, but you can get these nice 20% rips to the upside as well. So just keep that in mind. We are trending down. Earnings are most likely going to have to come down. The Fed is going to be very tough on the overall economy. So it is what it is. This is the QQQ, the NASDAQ on the weekly. We bounced to the penny at the 200 moving average. I think that's really bullish. Now, did it bounce a lot? Not really. But it is still holding up here. So until these things break, you have to look at this as sort of support. In the time being, you're in a very oversold market. I love markets that are down here. I like to buy down here. I like to short when they're at the top. I like to buy when they're at the bottom. So what I have done personally is this past week, the past couple trading days, I've started to build a little bit of a portfolio in some of the stocks that I feel are really good stocks and solid companies. They can't be companies that make no money. They cannot be, these silly stocks that are just going to continue to get wrecked. Like a lot of the Cathie Wood stocks, not going to happen. So anyway, this is where we're at. Tested lows, still closed above the June lows. This is what I'm looking at. But then we go over to the Dow. This tried to come back, but this closed at lower than the June lows. If a recession is going to happen, this is going to probably suffer just as bad or more than others. This is the Dow Jones Industrials, okay? So it had a nice bounce and closed just about at that. Let me pull this back 3 years at the pre-pandemic highs, right before we crashed. So we've done a complete coming right back to that level. Still oversold. You can look at it on the 1 year, and this is just obviously the common theme here we're seeing is that RSI really oversold. So a bounce can definitely happen at some point here. I'm looking to see, maybe you get some good news on inflation. Maybe the Fed says something, who knows? But that's just where we are. Maybe we just get a technical bounce. The IWM last week, we had this trend line broke, came right back down to this weekly level. Where am I getting that weekly level? I'm getting that weekly level right here. Gap fill took, to June and then came right back down to it. So this is a level where we've seen in the past some action. We've broken the 200, but we've done that before. So, maybe we just trade along here, or maybe we just continue to sell off. I would like to think that since we're down so much, so many stocks are down so much, that a lot of this has been, baked into the market already. So like I said, that was on Thinkorswim. What I'm doing now is I made a Webull options trading platform. So while on my Thinkorswim, I'm going to be trading momentum stocks and building positions in great companies and watch lists, I'm going to be trading options on Webull, and this is how I have it set up. So I have the actual option contract in here on the SPY. So just for an example, I took a call. I'm not in anything, but I'm just looking at the call, the 368 call, which is right up here, currently trading at 367.95. The way I normally do it, if I think something's going to go up, I take one out of the money. So 368, 369 contract, whatever you want to do. I also have this linked up with my active trader and this trade bar here. So this is linked. You can see here this one, the one, and the one. They're all linked up. So whatever options contract I put in here, it will automatically be ready, locked, and loaded for what I want to do here. I customized my buttons right here. But, that's just what I'm going to be looking at for the time being. If you want, you can come over here. You click on options. Let's go 4 days out, right? Let's take a 369. I'll right click on it. I'll add this to my options watch list right here. So now that contract is here. All I have to do is click on it, and this now populates here, here, and here. Now you can set this up any way you want. You can have 2 active traders. You can have one for calls, one for puts. Do whatever you want, but this is just the way that I have it set up for right now. I can change this. I mean, I set this up in about 3 minutes. So I can add things to it. I could take things away, but that's just going to be on Webull right there. Like I said, hit the thumbs up for the video. Tried to make this super quick, and we'll see you back on the next one. Take care, guys.